In this video, we're going to be going through the top 3 stocks I'm looking at investing coming into next week. We're currently sitting at around $170 as we're recording this. Now, one thing to note, we don't normally do this sort of technical analysis, but I did want to point this out just to potentially maybe hold back on entering maybe on the Monday and waiting for a bit of a potential pullback, because what you can see right now is we are getting a descending triangle. We've got that support around 166, but quite a clear and obvious downtrend or kind of resistance trend line. So what this can mean is, we could be more patient on this entry, but again, this will probably happen this week, and that's why I'm making it for this week's video. But waiting for that move to around 166, 167 could be that better entry. Again, it kind of just save us kind of a 3-4 point move and can just make more sense. Now, again, this is one thing to note as well, because this will usually lead to a breakout. Now, whether you take this as a bullish or bearish signal, that could be one thing you maybe want to be a bit more patient for, because if you see that break below it, come back to retest it as resistance, and we get that crack to the downside, again, you could definitely get a much lower entry if we break to the downside. But you also need to take on that risk then, and kind of that bit of patience and potential upside loss is if we end up cracking to the upside. Again, you still need to be patient for that retest before you can enter in. So it means your entry will be higher, or potentially higher if it does work, but again, it can save you from that potential loss or getting a lower average if it cracks to the downside. So again, that will be down to you as a trader. Just wanted to point that out, that we do have that there. But what we can do is delete that level. We can delete that level, and we can delete that level and just focus solely on the deviations like we normally do. Just one thing that I wanted to point out first. So what we can see now then is, again, we're still sitting at 170. Where are we sitting? So you can see our 1 year. So again, just to point out, if it's a dashed line, that means it's a 6-month chart. If it's a straight line, that's a 1 year chart. So just to point those out, that's what these lines mean. So you can see right here, we have the 1 year first deviation. That's going to be a strong support as we come down to here. And again, this is the level that's kind of continuously holding. And as we're holding this so well, it's making me want to kind of get in this stock. Again, it's a long-term play, so even if we do crack below, we can always get another entry in. But just something where I might want to get a bit of sizing, just considering we're holding this quite well in the potential bounce, especially while the market is staying quite bullish. Now, if we did break that, we would have that other target at 165.50. So again, you can potentially kind of use that more as a range to potentially get in at. Like if I was going to say to throw $1,000 in this stock, potentially kind of throw maybe 300 in at the higher level. And then if we do crack lower, get 700 in at that level. So that's one potential thing. And if we did crack down any further, just want to point this out, that's where we have our third deviation. This is always going to be my favorite entry at a third deviation, but it's, are we patient enough to kind of wait for it? And firstly, is it even going to go that low? Very rare for large cap stocks to kind of get to their third deviation. So if you only ever wait for that, a lot of the times you're never going to be able to get in, and that's always a problem. And that's why I like getting in some size at these high levels. But if we do end up going then to hit those lows, that's really where I want to get in the bulk of that size. So these are basically the levels I'd be paying attention to from the investment standpoint. Again, even where we are now, we are still more oversold, so definitely a potential to get in now. But again, probably better to wait to be a bit more patient to at least kind of 167. So we did have earnings. That is what led to this massive gap over here. Then where did we come down to? We came down to our second deviation on the 6-month chart and our second deviation on the 1 year. So they're trading quite similar between the 6-month and the 1 year. This is always something I like because it makes those levels that bit stronger. Now, whenever a stock is at its second deviation, it is oversold. It can be a great investment opportunity, especially if you're looking at the stock on the long term. So seeing that again, that is good potential for the long term. But the reason I wanted to put this chart up is because we are consolidating on this level. So if you're investing now, again, we will most likely get a breakout either way. So it's whether you want to be patient for that, because again, if it pops to the upside, great, you got in now. But if it pops to the downside, again, we could have delayed that entry. So it may be something, if you see the consolidation and you're not maybe the best of trading the break out of it. Again, we could either get in now with some size. and hold a bit of money on the tables in case we break to the downside, and we can pay attention to those levels. Or again, it's an investment, so we don't have to get that perfect entry. We're at an oversold value now, so if we want to buy now, it's still a good value to be getting in. So again, you may not care then for that bit of a difference in price if it potentially breaks to the downside. But that is the key area where we are now. Again, just to point out the actual levels, it's at around $423. So again, definitely paying attention to that as a key level. Now, if we break to the downside, this is again where we just add into that investment. And again, if any large cap stock that I like the look of, again, you've probably done your due diligence more on the financials and all the fundamental standpoints, and now it's just finding that technical entry. Again, this is always going to be a great entry. Well, from an investment standpoint, this is a good entry. But it means if we do break to the downside, it can be a good thing for us, because at 375 and 367, these are great entries for the long term, because again, this is our third deviation between the 6 month and the 1 year. Whenever you see these large cap stocks at their third deviations, really high probability that we start to bounce, because very rare do these stocks actually trade outside of that range. We're currently sitting around $127. You can see we already have a green line here. This is our third deviation on the 1 year. This has been hit. We have started to break through. Now this is key because again, this didn't just happen. We had that recent sell-off. We bounced off that level. We kind of hit that target. So again, if we were holding it in investment, we're already going to be in at that level. And if we traded it, again, we would have got out the majority of our size already. So from a trading perspective, worked great. From an investment standpoint, we still got that good entry, but we are breaking back down below this level. So if we're not already in it, or we want to add a bit more size, that 127 going to be a key level that we want to be adding at. But what's even more key is, looks like we're breaking down to that 52-week low, or at least we did after hours. So if on the Monday we can continue down, which would ideally be the case, 124 is going to be that great entry. Obviously, you're going to have that 125 psychological level, but 124, our final third deviation. This is the 6 month deviation. Coming into here again, very rare that you tend to trade outside of this level for any time, but even if it is, it tends to be short-lived. So if we can get target down at this low, should be a great upside opportunity looking, 6 months, a year, or even further down the line. So that's going to be my main focus. We don't need to talk as much about this because again, we did talk about this last week, but we are down basically at its final deviation, 124. Really looking at it long bias from here in my personal long-term account. Thank you for watching. If you enjoyed the video, you will probably enjoy this video too.